Ever wondered why some countries seem to print money like it's monopoly cash, yet never go broke? Meanwhile, others try the same thing and end up in total economic disaster. What's their secret? Is it a genius financial strategy or just pure luck? Today, we're breaking down 5 countries that print their own money and never go broke. And trust me, their strategies will surprise you. From economic masterminds to loopholes in the system, let's get right into the fascinating world of money printing done right. First, let's clear something up. Any country with its own currency can print money, but printing too much usually leads to hyperinflation, destroying the economy. Just ask Venezuela or Zimbabwe. But some nations have cracked the code, printing billions or even trillions without facing disaster. Let's count them down. China prints massive amounts of money, but here's their trick. They keep their currency artificially undervalued to dominate exports. By making their goods cheaper for the world, China ensures that its money stays in demand even as they keep printing. This strategy allows China to flood global markets with everything from electronics to machinery while maintaining a strong grip on international trade. The more the world depends on Chinese goods, the safer China's money printing game becomes. But there's more to it. China also holds trillions in foreign currency reserves, mainly US dollars, giving it extra financial security. This massive store of wealth provides a buffer against any potential economic shocks, making the country more resilient to global fluctuations. China's government closely controls the flow of money, giving them more flexibility to manage their economic policies effectively. And it's working. China's economy continues to grow, and inflation stays in check. By carefully controlling capital flow and interest rates, they avoid the runaway inflation that has wrecked other countries. However, the strategy is not without risks. The country's over-reliance on exports has led to rising trade tensions with other global powers, particularly the United States. Additionally, China's domestic economy is slowing down due to an aging population and ongoing structural challenges. Rising wages and environmental concerns could also threaten its manufacturing dominance. Can China keep up its magic trick, or is financial reckoning on the horizon? Stay tuned as we reveal the next country on our list. The British pound is one of the oldest and strongest currencies in the world. Despite economic challenges, the UK has a unique advantage. It can print money without facing the same risks as weaker economies. This is done through quantitative easing, where the Bank of England creates new money to stimulate the economy by purchasing assets like government bonds. This process injects liquidity into the market, encouraging lending and spending. So, why doesn't this devalue the pound? It's simply all about trust. Investors and global markets still have confidence in the UK's financial system. London remains one of the world's biggest financial hubs, ensuring steady demand for the pound. The UK is also a major player in international trade and finance, with global companies choosing it as their base of operations. Plus, the UK has strong institutions, stable governance, and a history of economic resilience. Even during financial crises such as the 2008 global recession, the pound tends to bounce back, reinforcing its reputation as a safe and stable currency. While inflation and policy missteps can impact its value, the pound remains a key player in the global economy. It is widely held in foreign exchange reserves, and many countries use it as a benchmark for currency stability. So, while the UK prints its own money, it's not about reckless spending, it's about strategic financial management and maintaining investor confidence. This careful approach allows the UK to navigate global challenges without destabilizing the value of the pound. Switzerland's economy is rock solid, and its money printing strategy is just as strong. Unlike other countries that flood the market with cash, Switzerland carefully controls its supply, ensuring the Swiss franc remains one of the world's most stable currencies. This meticulous approach is at the heart of the country's financial success, keeping inflation low and purchasing power high. But here's where it gets interesting. During global crises, investors worldwide rush to buy Swiss francs, because it's seen as a safe haven. The more uncertain the world gets, the stronger the demand for Swiss money. Investors are drawn to the country's reputation for financial stability, fearing the volatility of other currencies. And even when Switzerland prints more francs, that demand keeps their value high, reinforcing the strength of the currency. This economic stability is no accident. Switzerland's banking system, strict monetary policies, and international reputation for financial security make sure their currency remains rock solid. The Swiss National Bank, SNB, plays a key role, using policies that are aimed at ensuring long-term stability rather than short-term gains. Unlike other countries that risk inflation when they print too much money, Switzerland has mastered the art of controlled money creation without tanking their economy. With a highly diversified economy, low unemployment, and high levels of innovation, Switzerland remains a model for financial resilience. No wonder the Swiss franc is one of the most trusted currencies on the planet. It's not just about printing money, it's about knowing exactly how to manage it. Japan has one of the highest debt-to-GDP ratios in the world, over 200%. That sounds like a financial disaster waiting to happen, right? Well, not exactly. Japan keeps printing money without facing a major crisis. So, what's their secret? Unlike many other nations, almost all of Japan's debt is owned by Japan itself. This means they don't rely on foreign lenders who might panic and demand repayment. Instead, the government can manage its debt internally, keeping interest rates low and stability high. But here's the key: trust. As long as people believe in the yen and its value remains strong, Japan can print as much as it needs without spiraling into collapse. The economy keeps running, businesses keep growing, and Japan continues defying expectations. This unique approach to managing debt is often referred to as Japan's debt paradox. It's a fine balance between maintaining trust in the national currency and effectively controlling inflation. Japan also has a relatively low unemployment rate and a high savings rate among its citizens, which means that there's a large pool of domestic investment. This contributes to the overall stability of the country's financial system. In addition, the government's policy of low interest rates encourages borrowing and investing, which further stimulates the economy. Of course, this strategy isn't foolproof. If confidence in the yen ever drops, things could change fast. But for now, Japan remains a prime example of how a country can print its own money without going broke. It's a delicate and effective balancing act that's earned global attention and respect. And at number 1, we have the biggest money printer of them all, the United States. The US prints trillions of dollars every year, yet it remains the world's economic superpower, because the US dollar is the world's reserve currency. Countries around the world rely on the dollar for trade and store it in their central banks, keeping demand high no matter how much the US prints. This unique position allows the US to borrow, spend, and stimulate its economy like no other nation. While other countries risk inflation or economic collapse from excessive money printing, the US can seemingly print its way out of crises. But does that mean there are no consequences? Some experts warn that too much printing could eventually weaken confidence in the dollar, leading to inflation and a potential shift in global finance. In fact, as the US continues to print more money, its national debt has ballooned, raising concerns about long-term sustainability. If the US were to face a loss of confidence in the dollar, it could lead to severe economic consequences not just for America, but for the global economy as well. For now, though, the US enjoys an economic privilege unlike any other. The dollar's status as the world's reserve currency gives it unparalleled influence, and it remains the backbone of global trade. Whether this will last indefinitely is uncertain, but for the time being, the US continues to hold the reins of the global financial system, printing money like no other country in history. So, there you have it. Some countries have mastered the art of printing their own money, but it's a delicate balance. Too much, and it could lead to chaos. Too little, and they might miss out on growth. The key is smart, strategic control. What do you think? Should more countries try it, or is it too risky? Let me know your thoughts in the comments below. Don't forget to like this video, subscribe to Four Corner Facts, and hit that notification bell so you never miss an exciting fact-filled journey with us. Thanks for watching.